Welcome everybody to the bootcamp, Forex bootcamp training. Today's March 1st. Welcome to March. Just talking to one of my colleagues, and we were just talking about how fast this year has gone by. And it's already the third month of the year. Just yesterday we were just saying Happy New Year. Now we're getting ready for a new month. So March 1st, 2025. Welcome everybody. Thank you so much for spending some time watching the video. What you see in front of you is a chart. We're going to go over the chart. We're going to go over a couple key topics that I want you guys to write down. I want you to research, understand these key words, so to speak, because these key words have a lot to do with you creating an effective trading plan. Okay, because without the understanding these keywords, it's going to be really hard to understand like how to actually analyze the market. What I'm saying as far as not knowing the definition of these keywords. But once you know and study and write down the definitions of these keywords, there's no reason why you can't master being an effective trader. So the very first thing I want to talk about, the keyword that you want to write down is market structure. The very first thing you want to understand is what market structure is. Okay, market structure has a lot to do with the chart, of course. When you look at the chart, you have to understand that there's a structure going on in here, and you have to decipher whether it's an uptrend or a downtrend. So when defining market structure is pretty much the direction of the market. Okay. Now there's different structures, of course. Just draw it out here so you guys can take a look at this. There's always going to be either a higher high structure where the market goes low, and there's a lower high, which is lower than this low. So we call that a lower high, and this is a higher high because this high is higher than this high. So this is the first structure that you'll have to understand. So you got lower lows, which is all over here, and then you got your higher highs. Okay, so it's really important to understand the structure here. And then you have another structure, which is a downward structure of lower highs and lower lows. Okay, so this is pretty much a downward structure. So you got your low here, with this low right here is a lower high. Okay, then it continues to a lower low, lower high, lower low, lower high, lower low, lower high, lower low. Okay, so when you're looking at this market here, you have to understand, okay, which one of these patterns, right? Which one of these structures is, in conjunction with the actual chart itself? What looks like this pattern? Is it this right here? Yes. What looks like this pattern? Is it over here? Yes. So that's the structure of the market. So that's the first thing you need to understand is the structure. Now, when looking at this particular structure, you have to understand that the market, when it does this pattern here, the structure here, it eventually reverses and it goes in an opposite direction. Because here we had lower lows, higher highs, lower highs, high highs, and so forth. So if you do one of these numbers here, you'll see that there's low points and high points, right? This lower high is lower, it's higher than this low, and you got a higher high, and you got a lower high, and a higher high, and then you got, a lower high, right? Bigger than this low. Sometimes it'll even come down and equate itself out, okay? But never going below this lower high. Then it shoots back up and continue its pattern, okay? So this is an uptrend, okay? Because it's another thing you want to put down on your paper is what is a trend? Is it an uptrend or a downtrend, right? So this is an uptrend, okay? So this market structure pretty much telling you it's an uptrend, okay? And then you have your trend line. You want to put a trend line on your chart as well. And typically a trend line is from the bottom, pointing all the way up to the top, which you'll have, bounces off the trend line, or if it's a uptrend. Then you have a downtrend where it bounces off the line, right, and makes this particular pattern going down. So this is an uptrend, this is a downtrend. Okay. So market structure, then you have your trend lines, and next thing we want to talk about when you decipher, okay, what trend we're in, you have to now analyze, okay, now that I understand this is an uptrend, now I understand this is a downtrend, where do we start plotting our entries and things of that nature? We're going to go ahead and dive into that information now. So let me go ahead and clear this out. And we're going to look at this trend right here, okay? Because here, if you take your trend line and you stretch it all the way out, right? Stretch it all the way out. You can do it in segments, right? Like this. And then you have a level of consolidation where it goes sideways, right? Okay. This is like a consolidated level here. It pretty much goes sideways. This is consolidation. You never want to place a trade inside consolidation because you'll be trapped. So you want to be patient enough, and that's a key word. Patience is key. And be patient enough to see if this is going to change direction or continue its trend going downward. So there's another concept called breakout traders. You could become, if you wait for this to do its thing, it's eventually going to break out and go in the direction you want to go. All right. So again, you put the trend line. So this is just pretty much a continuation of a downward trend. So you have, downward trend, consolidation, downward trend. Okay. Now here you see there's another consolidation happening after it decided to go up a little bit, started to consolidate over here. So you put another box here. So you always want to put in your boxes for consolidations and then wait for a breakout. That's considered a breakout trading. All right, so it went up a little bit, but understand this. In order for this trend to actually, change directions, okay, which we call a change of character, it has to break a certain level. So typically there will be this levels over here. If the market continued to move up in this direction and broke these levels, then you have a change of character. It never did that. It stopped there and it continued its journey going downward right here. Okay. It's very important to understand. So we have a continuation of this downward trend. Okay. Because what did it do? All right. If we look at the chart again, we have a downward trend here, consolidation, and we have a low here, right? But this low is lower than this low. Okay. So this is a lower low, then it's lower than this low. Okay. And then we had a pullback, consolidation, and then it created another lower low. So if you take this uh, here, pull this low all the way over here, this is considered a break of structure. Okay. Because this candle over here, this whole area over here broke this structure area here. So this is a break of structure, a continuation to the downside. Okay, break of structure. So whenever you have a break of structure, you can anticipate it going lower. Okay. Now, then you just do the same thing over here. This, with that same line, because it's a low, right? Stretch it all the way out. You can see it's another break of structure. Break of structure, BOS, break of structure. So whenever you have breaks of structures, you can anticipate a downward trend, okay? Because unless it violates and goes in the opposite direction until you actually get a change of character. You can anticipate the market to go lower and create another break of structure. Okay, and then where do you place your trades? You place your trades on the pullbacks. Okay, like over here, because this is where you want to go, right? You want to make sure that you pretty much buy low, sell high. So you want to, place your order over here so you can ride this trend going down in order for you to be a profit. So that way you'll be in an area where it breaks this structure line right here. Okay. So same thing goes here. If you see this and you see a consolidation that breaks out of this consolidation, okay, and you anticipate a lower low, all right, you'd want to place your trades outside of this consolidated area, okay? Now, typically you want to wait for a retouch of the box before you place your trade. Like, and then you have to understand there's going to be areas where the market can fake you out. You're in this consolidation, you think it's coming down, all of a sudden pops back into the consolidation. Then it pops out. But remember, you have to wait, okay? You have to wait. So you would put another line, let's say at the bottom of this structure here, stretch it all the way out. Title this another break of structure. Okay, because you're in this consolidation, and all of a sudden, what does it do? It breaks that structure line right here and goes lower, and also breaks your structure line right here. Okay, it's another low low. Now, pay attention to patterns as well. Important to understand what patterns are. So we'll do a training on what patterns are throughout a trend. So the market will do a few patterns, and once you see those patterns, you can, take advantage of what those patterns are doing in the market. Okay, so now we know that we have to wait for the market to get a lower low, right? Now, I'm going to push, because I pause this area here. I'm going to push play to show you that, okay, so what do we need to do in this market? We're in the 4-hour chart right here. Okay. Now, what do you think? You think the market's going to do another lower low because we're in a downward trend, or do you think it's going to be a reversal? Let's take a look and see what it's going to do. Okay. Okay. We can pause it right there. All right. And then take our info line, place it right here, and say, what did the market do? Another break of structure. So we can identify that as a break of structure. Okay. That's a break of structure, and the market's going lower. There's a couple of break of structures here, because there's another low here, there's another low there. All right. Play. Now pay attention to this trend line. What happened? All right. What happened? The trend line now is being violated. Okay. It's not making any lower lows because the bottom of this chart is down here. All right. And what do we see here? Now we can call this area a demand zone. Okay. How do you identify a demand zone? Is when you see a bullish engulfing candle, you see strong candles on the up, ticking upwards. You can call this area now a demand zone. Okay, so we would mark out this demand zone like this. The candle before the bullish engulfing, you would mark it out and stretch it all the way out. Okay, like that. Now, we also want to see, can the market come back right? If we have, like, let's say, a fair value gap, can the market come back and touch the value gap? Or has there been a change of character? If you look left, has there been a change of character? Because what happens is you have your trend line going downward, and all of a sudden it violated the trend line. Okay. Now you look left and you say, okay, what area, okay, caused this lower low based on this break of structure line? And you can look at these candles over here, okay, the candles that actually are touching the trend line, and you mark this out. You say, okay, if this area right here, right, take this, stretch this all the way out. If this area here is violated, because as you can see, there's a lot of pushes in this area that did push upward, except for this little candle right there. It bounced off this area, okay, resistance, and then went lower, created this support level. It's also called a demand level, okay. And now all of a sudden it's violating this whole area over here. So we're going to continue to push play. And we notice, and I forgot to mark out the fair value gap in this area, which is right here. And this is the 4-hour time frame, by the way. The fair value gap is right here. Fair value gap is a third, 1, 2, 3 candles. The candle in the middle is really, really large. And it created a gap between this candle's wick and this candle's wick did not touch. It did not overlap. Therefore, it created a fair value gap. So that's where we put our fair value gap, right? And we wait for the market to come back and fill this area, okay? Because if it fills that area and does not go back down this way and bounces off this area, you now have a change of character. Because this area right here, okay, you could put a line here, top of this candle, and call this area a change of character. Because it's changing the whole characteristic of this downtrend. So we're going to label that as change of character. All right. Change of structure. Sorry. Change of structure. Because this is where it didn't make a lower low, right? It did make a lower low and it didn't make a lower high. What it's doing is making higher highs. All right. It's making higher highs. So it's here. It's up. It's making a high, lower high, higher high, lower high, higher high, lower high. And now what is it doing? It's coming back to this area called our fair value gap area, right? Didn't quite touch it, so we got to see if it will. And then kind of like, you know, we don't want to leave numbers here. So let's continue to push play and see what the market's going to do. Because now, since we have this change of structure, okay, we're going to be looking for buys, okay? Because we're looking left, and the left area, what we're going to pay attention to. So you're always going to mark out your left area as well. So that way you know that if the market goes above any one of these levels here, there's a change that's happening, okay? Because it's not making any lower lows. It's actually above your trend line right here, okay? Another thing you could put on your chart to give you direction of a trend is your exponential moving average. So when you go to your indicators, you type in moving average exponential, you put that on your chart. And then in the actual settings, okay, I don't like the color blue, so I'm going to change it to red. And then my input, I'm going to make it, you could do 100 or 50, it's up to you. I'll make it 100. Okay. So this trend, well, as you can see, moving average, a little bit thicker here. Our trend line, even our trend line was below the moving average, right? Below the moving average. All of a sudden, there's a change right here, which is a change of character, which is pretty much telling you that, you know, the structure that you had before going downward is now changing, going upward. Okay. Now, typically you want to wait to see what's going on here, right? Because if it bounces off your line here, then definitely you would take a trade going upward, but it's below the line now, right? Because we're trying to hit this fair value gap. So let's push play to see what's going on. Okay, okay, so right there, we bypassed our fair value gap. Okay, so it filled it, but at the same time, it came down to this area, which is our demand zone, right? And it did not go lower than the demand zone. It didn't go below the demand zone for continuation of a downtrend. Instead, it bounced off your demand zone, created another demand zone right here, which is almost similar to this demand zone, right? It's created a bullish engulfing candle, which is similar to this bullish engulfing candle, and created a gap between this candle here and that candle there, came back and filled the gap. And now what is it doing? Not only bounced off the gap, fair value gap, but it also bounced off your moving average. So this is where you start looking for buys. Okay, placing buy orders. Okay, stretch this out, bouncing off the demand zone, bounce off, this whole area, and look what's happening. Pause. Okay, so when you start marking out your charts and you see stuff like this, okay, where you place your order is going to be, remember, on the pullbacks. Okay, on the pullbacks. So you place an order somewhere in this zone, you place your order in this zone, you place your order on this zone. Remember, never place an order on on the higher highs. You don't want to place, you want to place your order on the lower highs. Okay, this is a lower high, right? Let's mark it up. Low, high, lower high, because it's higher than this, low, higher high, lower high, place your trade in here. Higher high, lower high, place your trade in here. Higher high, lower high, place your trade in here. Get your high highs. Okay, so that's pretty much how you should analyze your charts. Understanding market structure, understanding your trend line, understanding break of structure, understanding change of character, okay, and placing your orders on the pullback, okay, and be patient, patient enough to say, hey, I gotta wait for the pullback. I gotta place my trade when I first open my account or you have to have a platform to place your trades on. There's MetaTrader 4, MetaTrader 5. Some of the vendors now um, have their own platforms that you can trade from. So when you open up your chart, you want to plot out your strategy first before you place a trade. Don't go in with 2 feet because you're going to get burned. Because I don't know if you ever experienced it where you place a trade in, it goes totally in the opposite direction. You're like, but I thought it was going to go up. You can't do that. Can't do that. Those days are gone. Do not place your trades when you first open up your charting platform. You want to plot out a strategy and wait and place your and set traps. Once you set traps, wait for the market to pull to your trap. And then if it makes sense based on confluencies, based on, different indicators or so forth. Like I just put one indicator here that told you that pretty much just, moving average is also a trend line. Okay, you could use this as your trend line because now it's an upward trend, right? It's doing one of these numbers. Before, when you looked over here, the moving average was pointing downward, right? Moving average was pointing downward, which told you it's a downtrend. So whenever you have a moving average, you have your candles below the moving average, you want to place sell orders. Above the moving average, you want to place buy orders. Okay. And this is a 100 moving average. So if you want to, you know, take a picture of my settings, I put 100 length as a moving average. Pause the video, look at that. Style, I place red. You can put any color you want. Thickness, you can put whatever thickness you want. And you click OK. And just use this moving average as your guideline. Okay. In case you don't know exactly, where the market's going, this could also be treated as a trend line. Okay. Moving average can be treated as a trend line. So it's a really good strategy for you to implement and practice. All right. Back test, back test, back test. And if you can get, trading view and pay for it, you'll have access to this playback tool, which is a replay tool. And then you can plot out a strategy and say, okay, what do I need to look for when the market actually starts to trend higher? Okay. Well, you need to look for a change of character. Okay. If it's trending lower, you want to take a look at what these breaks of structures are. If you continue to break your structure, it's going to trend lower. Okay. Now, the break of structure is also on the upside as well. If you continue to break your structure on the upside, and I'll plot it out here real quick here for you. Like right here, it started to trend higher. Now, if you look left, you have a break of structure. Right here, a break of structure because now it's pulling higher. Okay, here, you have another break of structure. You have another break of structure. Okay, so it's going higher and higher and higher, and all of this here are breaks of structures. Okay, and you would label it accordingly. Now to label it, you just double click on the settings, go to text, you type in the word break of structure, POS, POS, and you can save it. Save as a template, which I've already did. And once you save it, you can now double click it, go to your template, click on BOS, it'll automatically fill it for you. That way you don't have to keep typing it. Okay. And it'll always be there for you. That way you know where your breaks of structures are. Okay. So hopefully that was helpful. This is the way I pretty much work out everything when I trade, but I set traps. Okay, I'm setting traps on the pullbacks. Remember, these are all pullbacks here. Setting traps on the pullbacks. So if I miss a trade down here, okay, I'm going to wait for it to do its thing, right? Stretch out my area of interest, which is my fair value gap. And I'm going to wait for it to come to my fair value gaps, which is areas in the market that candles do not meet. Okay, so again, here and here is a fair value gap. Here and here is a fair value gap. Okay, and then lastly, here and here is a fair value gap. And what did it do? It came down and touched my fair value gap, bounced off the fair value gap, and continued its journey going higher. Okay. So yeah, rewind the tape, understand market structure, understand trend lines, place your trend lines, understand where your demand zones are. It's below everything. Supply zones are above. You buy off demand zones, sell off supply zones. Break of structure is when the trend's going lower and it continues to go lower and it breaks a lower low. That's a broken structure. If it breaks a higher high, it's a break of structure. And then the change of character, if it changes the whole entire structure, change of structure, change the whole entire structure of your uptrend or downtrend. Once you see stuff like that, you know what directions the market's going to go into, and then you plot your strategy to take buys or your strategy to take sells. Okay, so hopefully that was helpful. Hopefully you got a lot out of this training. We'll dive deeper into this concept next week. That way I can show you where to place your entries, how to place your entries, where to place your stop losses, where to place your take profits. Because once you start seeing the market structure change, now, okay, you start placing buys, and then you actually take it to another level, like a 1 to 3 ratio, so on and so forth. So I just wanted to share that with you guys today. I am actually in a challenge. I'll share that challenge with you guys in another video. And I think my session ended. No. Okay, I got 2 minutes and 42 minutes left. 2 minutes and 38 seconds left. Okay, so let me share with you a challenge that I'm doing. Okay, so I'm doing a challenge with 4 traders. The link will be in the description if you guys want to do a challenge as well. And I like this company because it's very simple to understand their actual trading journal and their dashboard. It's a really clean dashboard, very simple dashboard. I actually purchased a $15,000 challenge. And the challenge pretty much tells you exactly what you need to do in order to pass the challenge. Phase one, I'm in phase one right now. As you can see, I passed this area here where you have to 3 trading days. I'm on my 5th day, no drawdown, which means if I go below $1,200, challenge is canceled, or I would have lost the challenge. My maximum daily loss is $622, so I cannot lose no more than $622 in one day. My P&L profit is $569.30. Okay, so my goal in order to pass the challenge is $1,200 in profitability in order to get to phase two. And then once I've passed phase two, I get a live trading account for $15,000. And there's a profit split between this prop firm where I get to keep 80% of the profits. So let's look at the trading journal. Just to show you guys, I'm a win ratio is 54.52%. Okay, my P&L again, $569. I'm up challenge. This is the calendar of event. I started Tuesday.